Hello, fellow traders. Tis I, the Rumpled One. It's Tuesday, February 5th, the year 2019. Let's talk trading. How to trade like a pro getting started. I got a comment, um, and they were saying that, even pros have coaches. They help them along. They take them through something step by step. So, that was a fair comment. So maybe I can coach you along just a little bit. So, first thing is money and risk management. You know, I beat this like, it's like beating a dead horse. But the thing is, it's so important. And you're getting started, let's keep it simple. You trade, you know, zero point 0.01 lot, a micro lot. It'll be somewhere between what? 8 or 9, 10 cents a pip. Okay? And I don't know if you have $100 account or $1,000 account or what. Doesn't matter. We're going to trade a dime a pip, and we're going to say we're not going to lose more than $1 a trade. So if you have $100 account, that's a percent. If you got $1,000 account, that's 10%. That's all we're going to risk per trade. Okay. So $1 is what we're going to lose per trade, worst case. We already know our position size, and we already know our stop loss is going to be 10 pips, right? Okay, now if you're doing 9 cents a pip, you can make it 11 pips. Point is, we're not going to lose more than $1 per trade. So what are we going to do? What are we going to do? Well, why don't we just, if I can, I got so many charts here. Let's just take a look here at the price action screen, okay? Now, you don't have to use any of my fancy indicators for this. All you really need, you can use the 3-level ZZ semaphore to get the balls, and you can use the sweet spots gold just to get the horizontal lines. Okay, so what do? We wait for a ball to appear. And then, after that ball appears, we're going to trade away from the ball. And at the first line, we're going to enter our trade. So if we enter here, stop loss is here, 10 pips. Simple, right? And that's what we do. And we wait. And we wait and we wait for the trade to appear. So a couple hours ago, you had a trade. And actually, this hour, you had a trade because 3 ball here, green at the line. It was really green right at the line. So you take that trade. And that's all you do, nothing more. You entered a trade, you set your stop loss. You look and see what price is doing, and then you take profit if you're so lucky. So in this case, price went up, closed here, and you see it fell out of the wick zone of this candle. So just take your profit. That's it. I mean, you had a high of what? 43, so you made 2 or 3 pips. Not a big deal, right? But you didn't lose. And that's it. That's all you have to do, and do that repeatedly. Okay, maybe you don't like the 3 ball. So you can trade the buy zone, but it's basically the same principle. Okay, you see we've got the open here, pivot was above, but it was below the trigger, so not much of a bias. But anyway, you enter, you take profit. Came back the other way, crossed the open. You could trade right here at the open, cross, or you could wait and trade at the short zone. You also see you had a weekly open, but you had other opportunities before you got here. Now the opportunity here would be long to see if price wants to go back above that weekly open. And so remember, when you're trading the opens in the buy zone, you are trading away from the open. So see here, it crossed the weekly open going up, so you trade away from it. Here, it crossed the daily open, you trade away from it. It crossed the weekly open, once again, trading away from it. So you are short below and long above. Simple, basic stuff. This is how you get started. And notice, I didn't talk about any concepts like support, resistance, supply, demand. I don't care about that because it's all conceptual in nature. And the thing is, it doesn't matter why the market moves. It just matters if we're with the move. That's all that really matters. And you see here, we've only got 59 pips. And we only got a couple of hours left in the day. So chances are this is just going to be a very tight day, right? I mean, one gap's already filled, so we don't worry about that. We're still above the year. We crossed below, but came back above on the day. And see, here's the first day of the week, right? Right here. You see we crossed below, first day of the week, low right here. But then you had all these other crosses. High for the first day of the year, first day of the month. Once again, horizontal line trades, trading with candle color. Not that difficult. And once again, just reading the candles. If you took that short right here, you see price came all the way back, right? But chances are it opened, it came down below, and then came right there. You see, that's where you should have taken profit. And you can see that in all of these pictures. You see here, price went up right here, came back, crossed through, take profit right there. It's not that difficult. Okay, once again, we're above the first day of the month and above the first day of the year and first day of the month. We're within the range of the first day of the month and the first day of the year. Actually, the range, yeah, first day of the year right here. Okay, inside bar, we don't have any action on it right here. Looking at the high open low for the current and previous, you see here we entered the wick zone, but we came out. We'll see that again. And same thing here. Highest open, lowest open. And right here we put in a weekly H1 lowest open a couple hours ago, taking that trade. Proves to be profitable. We've already gone over the buy zone. The rat zone. See, we put in the low, high here, low here, 59, almost 60 pips. You can then start looking for reversals anywhere in this area. And you'd see right now you're up a whole pip if you waited to the last. But if you got in anywhere down here, you see you gained pips. Pivot. We already took out the pivot for the day. Weekly pivots here. Let's see, did we take out yesterday's pivot? Nope. Came close, but did not take it out. So we still have a missed pivot from February the 4th. 30 pips above it right now. That pivot still needs to be taken out. Okay, you see a one ball is forming right here. So that happened this hour. So right now, we'd be looking to go short at 40. If it pushes above 50, then we'd be looking to go short at 50. Once again, simple trades. You can do these. You can pick one of these and just stick with it and see how it works for you. Wick zone, as I said, in and out, in and out. Once again, trading with candle color. We use the H1. Why H1? Because it has a nice range. We've seen what the range is on the H1. Let's see, where's range? Frequency distribution range for H1. You can see it's going to be 10 or more pips about 70% of the time. It's a nice range. You can pick up a handful of pips using that. So that's why I like to use the H1. And you can see here, once again, just horizontal line trades, previous open, high, low for the previous daily, weekly, monthly open, high, and low. Once again, we trade with the candle at the line. We pick up some pips, sometimes a little, sometimes a lot. And looking at the tick chart, you can see here we've only had a couple of, 2, maybe 3 pips of range at that moment. Okay, I didn't refresh the chart. We could do that. I need to put a button on that indicator. Maybe I'll get around to doing that. Make it a lot easier. Now, somebody was asking, see, you set the line right here, right where you open the chart. Now, I have it basically 2.5 pips on either side. This is my trigger because the spread is about 1.2 pips or so. So that's 2 times the spread. So I figure if it moves that, it's going to keep going. It has to at least move the spread. I want to see it move the spread one more time, and then I will jump in the trade if I'm scalping like this. And remember, your results may vary. This is for educational purposes only. Now, once again, we were talking about the ATR. And so you can see here we've got the daily ATR, weekly ATR, and we haven't hit it yet. And you can see here range 66 for the week, 59 for the day. It's just not moving right now. So if you see it's not moving, then you want to take pips. Instead of trying to look for 10 or more, maybe you just take 5. It's that simple. So, fellow traders, that's how you can get started in trading like a pro. You pick one thing, something simple, get your stop loss, your risk, money management, you got that down. You enter the trade faithfully each and every time. You don't try and second guess it. You stick with the plan. You take pips. You look at the price action. And you take what you get. And sometimes you're going to lose. And that's okay, because that's trading. Because remember, it's not what you trade. It's how you trade it. So go out there and drain the banks like a pro.